Hey everyone, Heather here, and today we are going to quickly go over the market net flow for today and for yesterday because we got some pretty nice moves to the upside and downside today and yesterday. So I just wanted to talk about how I played them and how, if you as a retail trader wanted to look at the market net flow plays, how would you have done it. So it should hopefully be a short video, but I really want to sort of emphasize on how well this market net flow tool has been working over the last couple of months. And so that's why I'm creating this video. So before we dive further, if you don't know about what market net flow is, please watch the latest video. Not the latest, this is going to be the latest one, but please watch the last video on our YouTube channel. It dives deeper into what market net flow is, how it works. But still, if you're not familiar with it, then on a very high level, it's basically the options flow of all the stocks in the market, excluding the ETFs or the indices such as SPY, QQQ, and IWM. We remove them because they are often used for hedging, and we don't want to have a hedged flow in our calculations. We only try to look at directional flow so that it can tell us where the markets might go. And so the green line here that you see is the cumulative premiums of calls for all stocks in the market, and then the red line is the cumulative premiums in puts. If the call line or if the green line is going up, that means more calls are being bought. If it's going down, that just means more calls are being sold, because these are net premiums, and net is anything like bought minus sold positions. And then if the red line is going down, that just means more put selling. If it's going up, then it means more put buying. Then the bar chart on the back is just like a summation of green and red line at every point, and then the white line is the stock price for SPY. You can also have QQQ here or IWM here on some other ETF or index, but SPY is what we have chosen. And so the idea is, if we look at the individual flow for all stocks in the market, then that might provide us a direction of where the entire market might go, which is why we are comparing everything with SPY, because it's a portion of the entire market. And then on the bottom, we have momentum, which is basically sort of how these green lines and red lines are converging towards each other, or what's the trend in the red and green lines. So if momentum is green, then that just means there is calls are picking up in a much better way, or in a faster pace than puts. And so with green momentum, we want to find obviously bullish plays. With red momentum or with negative momentum, we want to find bearish plays. And so hopefully, I think that gives you a quick introduction to what market net flow is. So this is based on options flow for all stocks for all expirations. So it's completely unfiltered. The only filter we do apply, which is sort of proprietary to us, is we try to remove a lot of the non-directional flow, which is where sort of the utility and the alpha and market net flow comes from. And then what's left is the directional flow, and it tells us the direction pretty well. And then if you do want to filter for expiration, or if you don't, let's say you want to only look at the market net flow for flow expiring within, let's say, the next 2 weeks, because you want to look at short-term flow, then you can actually go to expirations and change it from here. Some people look at just the 7 or 15-day flow, which would filter out anything that's expiring after 15 days. That gives them sort of quicker moves, or that tells us when the trend changes much faster than the entire sort of net flow, that market net flow. All right, so that's a basic introduction, but I think the reason I wanted to make this video was actually go into a couple of plays that we made. Let's actually dive right into that. So there are 2 or 3, I think, principles that I've been following with market net flow. The first is, if you're going into SPY, QQQ, or any individual stock, you need to make sure that the market net flow is showing the same sentiment that you have. If you want to buy calls, then please don't buy calls unless the market net flow is showing some big bullish momentum, showing some sort of call buying, some sort of bullish algo, which is the bar charts at the back. And so the market net flow should be showing some direction based on sort of what you want to play. If you're going against it, then you'll find that I think it doesn't work out that well for the most part. Obviously, then nothing is perfect, but like that's the basic sort of I think principle. The second is like you do want to see clear trends in how the calls and puts are there in the market. So today was a very trendy day. I think like initially for the first 20 minutes we had like a bit of a chop session, but then after 30 minutes, we started to develop this trend where calls were being bought, puts were being sold, and that then gave that sort of gave us this big move from 386 all the way to 392. And so just like want to emphasize that like you do want to see clear trend. The more confluence we have, bullish momentum, very clear trend in calls and puts, and the better the plays that we have. So let's actually talk about the two plays that I made today, and I'll go over some of sort of the reasoning. Then I hope other people can learn something from it. So I have the 3-minute chart. You can also pull up the 5-minute chart, and we are mostly just talking about day trading here. Because market net flow is really sort of truly suited for day trading. People use it for swings as well, but I think for the purpose of this video, let's just stick with day trading. So one thing that I do, and this is sort of the third principle, is like I take the direction from the market net flow and then I try to find some very simple technical analysis based setup based on support and resistance or moving averages, and like that's all I do almost every day, and that works pretty well. Obviously, I think you don't have to take my word for it. Please go ahead, backtest the market net flow by actually changing the date from here, looking at previous market net flows, and seeing how well or sort of how bad they work. The historical data is free for everyone, so you are not forced to sort of get a subscription to us, subscription with us. You can just go ahead, look at all the past data, and actually see for yourself if this thing is worth looking into. I obviously, since I developed it and I am like a huge proponent, I think this is the best tool for retail traders out there. So obviously, like I'm very high on it, and I personally use it every day. So once like we started the day, you can see the pretty nice chop here. So we did not have a clear direction, but at around 10, you can see the calls started to go up, which means more call buying, and puts started to go down, which means more put selling. And both of these are bullish signals and let's quickly talk about why. When retail is buying a lot of calls, then market makers are selling those calls to provide liquidity. When market makers are selling those calls, they want to stay hedged. So since selling call is a bearish position, they're going to buy the underlying shares, which is going to push the prices higher. Similarly, when we are selling puts, then the market makers are the ones that are buying those puts. And since again, buying a put is a bearish position, they're going to hedge that with buying the underlying shares in, let's say, S&P or whatever flow we are looking at. And that sort of forces the market up when we have this clear trend in the flow. So there's a very good logic behind why this works. It's not like a hodgepodge or sort of some random technical indicator. There is good logic behind it. The flow is actually forcing the market makers to do what we want them to do, and it's very hard for them to not do that, because like they want to stay hedged. So when the day started, obviously we had some chop, but at this point in time, at around 10, we had started to develop a trend. I actually tweeted about it, sort of you can go and sort of look at the timestamped tweet, because once this trend started to develop, then we were looking for a bullish play because the trend was bullish. So the first thing that works pretty well at the start of the day is if you clearly get a trend, right, let's say in the first 30 minutes, then it's a good idea to look at the high and low of the first 30 minutes and then look for a break of that higher and low, which is also called the opening range breakout. So this was the level I was watching because this was the high of the first 30 minutes. And I think at this candle, we broke it. But at this point in time, flow was still picking up. So at around this point in time, I bought a call. And you can see we immediately went down. But that was completely fine because previously this was a resistance. This was a high. And now it has been turned into a support. And you can see at this red candle, we actually found support. So I stayed into my positions. And then at around here, I exited for a 20% gain because I had a weekly contract. Then I think we started to sort of consolidate here, a couple of candles, but then we sort of broke out again here as well. And since these are EMA clouds, you can just search them up in TradingView. These are also providing you sort of some sense of what the trend is. So as long as the trend is staying up, you can keep building positions. And it's not just the trend in the moving average. I think that the confidence actually comes from the trend in the algo flow or the market net flow. This was positive all day. So anytime there was a dip, anytime there was a consolidation, we were looking to buy. And so that's what we want to do. and that obviously you can see worked very well. So I made two plays. One was from here to around here, and then the second one from here to around here. The second one I executed for 10%. But I think most people are very reluctant, especially given sort of the state of market we are right now, and they think that people are just, I think, just cherry picking their trades or cherry picking the stuff that they show on social media. And that's one big reason we have added all this historical market net flow for free for everyone to look at sort of yourself. So you don't have to really believe me. I really just wanted to emphasize the fact that you can use some very, very simple technical analysis as long as you have a good direction from the market net flow, and that will give you pretty nice moves. So I think, like, if you had kept contracts from here all the way to the sort of high of the day, that would be like a very easy 100-200% gains. But that's like the best you could have done. I think doing a 20-30% gain every day, that's massive. Like, if you can consistently do it, and that's something that I've been really trying to do, I think that goes a long way. So, like, quick moves, get out, get in, and just sort of take this market net flow as your guide. So today everything was like good. We had very clear direction in the market net flow, and we played it for pretty good gains. But I think again, I do want to sort of make it a point in my videos to focus on the fact that most people are I think bullshitting when they are talking about their trades and sort of how easy or simple it is. So I think I again want to emphasize that please don't take my word for it. Please go to the Tradytics website. This is again free. Look at these market net flows and see if you can build something for your own. I think this is, like, again, I'm repeating myself. I think this is the best thing out there. Let's actually look at what happened on Monday, which I think was a lot more interesting than what happened today, because today we had a clear trend. It was like very easy to play it, but I think yesterday it was a completely different scenario. So now I have opened up the market net flow chart for yesterday, and we got a big move down yesterday. We got a big move up today, and we'll see how market net flow got both of them. So yesterday we started the day, there was some call buying, but again, going back to that, like, take the direction from the market net flow, but then look for some simple technical indicator or some simple price action analysis to actually do the actual trade. So this is, let's clear out the drawing. This is how we started yesterday, and you can see calls went up, but price wasn't following. So even if, like, at this point in time puts were down, calls were up, we were looking for a bullish play, but we never really broke the high of the first 30 minutes. So, like, that's where, like, this 2-minute technical analysis, price action analysis comes in. It saves you from a lot of the bad plays that you might make, because, like, flow traders at this point might have been expecting the price to go up, but as soon as it did not, you can see they immediately started selling their calls and they started buying some puts, but they still sort of sold their puts all the way till the mid of the day. And then at this point in time, you can see, like, price couldn't really move for it around half of the day, and that was being shown in the flow as well. They were selling calls and they were selling puts to collect sort of short-term premiums. And I think at sort of a mid of the day, and I think this might be a lot more apparent with 7-day flow. So I think I'll just leave that as an exercise. Go look at the shorter term flow. It gave us the down move much faster than the sort of unfiltered market net flow. But just for the sake of consistency, I'll stick with the unfiltered market net flow. Alright, so we couldn't do any move, and, like, this was the low of the day that we established, let's say, at the start of the day till about like 12, and then you can see we did not break this for a long time. At this point in time, at about 1, you can see that yes, so before like 1, you can see the momentum had started to turn red, which means calls were being sold now and puts were starting to pick up. And these sort of exact absolute values for net premiums are obviously important, but what's also very important is the trend, and momentum measures like how is the short-term trend changing in the underlying flow. And like you can see at this point in time, puts were starting to get bought up and they started to sell a lot of calls. And so at this point where the puts line crossed the calls line, that's what we call a bearish cross. Once we get a bearish cross, all we want to be doing is looking for bearish plays. But before we had the before we had the bearish cross, we did have a momentum turn at this point in time. And at this point in time, you still don't want to be. So I think this would be about like this. So you don't want to be looking for bearish plays, or you don't want to be entering bearish plays right now. You just want to be aware that the market is showing a bearish trend right now. It's not as strong of a trend as we got today, but it's still a trend. And if you want to make trades every day, I think you need to go with what we've got. Obviously, I wouldn't go in as heavy as I would go today, because today trend was very clean. So I'll probably like start a small position here. So then at this point in time, you're just getting ready for a bearish play. You're not really going into one right now. And if you look at sort of a very good support level for the day, you can actually draw these by just clicking here. And like this was a good one, but I think this was an even better one. I wish our algorithm had drawn this one. So this was a pretty nice like low of the day. We tested it once, twice, and thrice. This is the time we finally like. At this point, once the algo had turned bearish, the momentum had turned bearish, and puts were starting to get bought up. This is the point where we actually broke the low of the day. And you can see, like similar to today, we started to go up, but then that support was now turned into a resistance, and we couldn't really break it. And once like this trend started, the market net flow, we also got obviously a cross, but once this momentum turned down and we had this sort of break of the low, I think that's where sort of the big move yesterday started. And if you had entered here, and like even if you had exited here or here, I think you would have made like a nice 10, 20, 30% again. But I think the real move actually then came later on, once we actually did this cross. So if you're not following momentum, because momentum can sometimes be a bit noisy, market crosses or these bearish and bullish crosses are really, I think, solid in terms of performing and sort of always panning out. So even if at this point in time at about 386, so that would be around here. So I think just sort of using these moving average clouds or these EMA clouds as potential areas where price will start going down from, just using those, or like simply using the support and resistance levels from our tool. So you don't have to use support and resistance levels, but just use something simple and then just sort of pick the direction from the market net flow. So I think the point that's more important is like from this point onwards, especially from this point onwards, all we were looking for were bearish plays, especially from this. I think like even with momentum, you'll see sometimes it gets noisy. So I want to like, again, stay consistent, not cherry pick things, and just focus on these market crosses where now we have a clear trend. Puts are going up, calls are going down. So from this point onwards, once we broke this sort of support, I think from here, first to here, and then from here to sort of here, that was a pretty nice, I think, $4 to $6 move in the day. So obviously, I think somewhat choppy because we did not have a clear trend, but you could have still traded it and made a pretty good amount of money. And so that's, I think, just sort of some quick trades that I made yesterday and then I made today, and I just wanted to discuss my rationale behind them. I think the one advice that I'd have for newcomers or for people who are just joining the platform is start small, like spend maybe like $100 every day or $50 every day doing SPY calls or puts, and then let's spend some time with the market net flow tool. I think like you are not going to find anything that's as reliable. So other people have done their back tests and they have come out with around 65 to 70% accuracy with these market crosses, and I don't think like that's very common in the trading world. I think anytime you want to go above 50, I think that's always a very hard thing to do. So again, like that's it for the video. Please leave any questions that you might have. I'll obviously be making more videos on the market net flow, but I think again, please go ahead and do your own analysis and see if you can start using this to sort of make money and to find some alpha. I always think it's pretty hard as a retail trader to find a consistent alpha over I think many years. We did some back tests for this over the last 2 or 3 years and they were very positive. If you know about what sharp is, we are getting about 1.5 to 2 sharp pretty consistently. So thanks for watching the video. I hope you're getting something out of it. Please again leave any feedback or comments in the comments below. Thank you so much. Goodbye.